Crypto as an asset class is highly volatile. It's for people with a high tolerance for risk and who understand they can lose the entire value of their investment. Crypto may be more susceptible to market manipulation than securities. It's also not insured by the FDIC or protected by the Securities Investor Protection Corporation. Investors in crypto do not benefit from the same regulatory protections applicable to registered securities like stocks or bonds. Fidelity Crypto is offered by Fidelity Digital Assets. Brokerage accounts and securities trading are provided by Fidelity Brokerage Services, which does not offer crypto as a direct investment or provide trading or custody service for such assets. Throughout this interactive conversation, you'll hear us use words like cryptocurrency, Bitcoin, Ethereum, and many more. We may use terms like crypto or digital assets as substitute words for specific coins, or to talk about the ecosystem as a whole. Just remember, all coins and tokens have very different attributes and use cases, and the ones we talk about here are only part of a wide variety of digital assets in existence. Hey there, welcome to the Covering Crypto live stream. I'm Jim Armstrong with Fidelity. You know, it's pretty common to hear the word crypto or cryptocurrency used as a synonym for Bitcoin. So it's common, but it's also a mistake. Cryptocurrency, that's an umbrella term under which so many different cryptocurrencies fit, including Bitcoin and almost countless others. All of those different coins and tokens, all of those different cryptos, each have their own distinct use cases, value propositions, maybe different technology backgrounds, different potential futures, which is why it's really important to be able to distinguish between and among all of them, which is what we're going to spend a lot of our time today doing. We're going to focus on the 4 cryptocurrencies available for trading with Fidelity Crypto, and those are Bitcoin, Ethereum, Litecoin, and Solana. So to have that conversation, we are thrilled to have a couple of fantastic guests join the panel, Max and Matt, both of whom have been on the show before, but it's been a minute, so it'd be great if you could just introduce yourselves real briefly to the audience, tell them a little bit about the work you do here at Fidelity. And Max, we'll start with you if that's okay.
Yeah, this is awesome, Jim. I love this topic and thanks for having us. Hi, everyone. I'm Max Waddington, been a research analyst with Fidelity Digital Assets for about 3 years, and I've spent 7 total years with Fidelity, like the broader firm. I'd say the biggest role that our research team plays is really just educating our clients, our institutional clients, helping them get comfortable about this industry, giving them what they need to help them understand whether it's data, research, analysis. I specifically focus on Ethereum, Solana, other smart contract platforms. So that seems to fit pretty well. And I'm hoping we get some good questions to maybe help some other folks along their learning journey today.
Yeah, sounds great. And Matt, how about you?
Yeah, it's great to be here. I'm Matt Hogan. I'm also a research analyst for the Fidelity Digital Assets team alongside my colleague Max Waddington. And hopefully I can help be a good complement today because I focus more on the Bitcoin side to Max's Ethereum and Solana. But as Max mentioned, we focus on really helping institutional clients better understand the digital asset ecosystem that is emerging. And we do this really by helping break down the headlines, providing analysis on what's moving the markets, and really try to help bridge the knowledge gaps that exist between traditional asset managers and the digital asset space. So, definitely excited to be here today and really looking forward to the conversation.
The 4th member of our team is Kelly Allen. Her day job is working on our educational team, but today for the live stream, she's going to help our live audience navigate the interactive parts of the show. Hey, Kelly.
Hey, Jim. Happy to be here.
All right, let's start off with an agenda, give people a sense of what we're going to be talking about today. We'll spend the first 5 or 10 minutes or so doing a bit of a compare and contrast, looking at the 4 coins that I mentioned at the top of the show. And then we'll do a bit of a deep dive into each of them. We'll start with Bitcoin, move on to Ethereum, then Litecoin, and then Solana. And then we will take as many live questions as we have time for. We have a couple of great questions that came in from people who registered for the live stream that we thought would be an opportune way to start off the conversation. Charles wants to know if Bitcoin is the same thing as crypto and what's the difference between them. Nathaniel's got a slightly more nuanced question. What's the difference between Bitcoin, Ethereum, etc.? Aren't they all just cryptocurrencies? Why would one be more valuable than the other if they all have the same characteristics? So Nathaniel, that question is really going to shape the entire live stream today. Charles, as I mentioned at the top of the show, you're not alone in thinking that Bitcoin and the word crypto are synonymous, but they're actually not. Crypto is the larger term. Bitcoin is a cryptocurrency. All cryptocurrencies that are not Bitcoin are collectively referred to as altcoins, short for alternative coins, as in alternatives to Bitcoin. But Max, I'll turn it over to you now to talk a little bit more about Bitcoin specifically, since it does tend to be, I think, the place a lot of people start to learn about crypto in general.
Yeah, absolutely. To Nathaniel's question, I sure hope we get to all of the like everything under the sun. There's so much there, but to start off, that is something you hear, and I like how you kind of started with that intro of making that difference. On our research team, we've always said start with Bitcoin when it comes to your learning journey because it's the simplest, it's been around the longest, and while understanding Bitcoin can help you get a better start or a better understanding of the rest of the space. There is, that common misconception that I hear, like you pointed out, that like all cryptos are just copies or based on Bitcoin. And like you said, that's definitely not true. We typically just refer to everything that's not Bitcoin as an altcoin. And they each come with their own kind of characteristics, so it might not even be fair to group them all together. But just as an example, like some cryptocurrencies or altcoins are used as like payment rails, or others can be used for trading. Like Bitcoin, there can be other stores of value. So it's a wide open ocean here, but that's at least a start differentiating Bitcoin from everything else.
And certainly we'll spend a lot of time talking about Bitcoin, but during this compare and contrast section, Max, you've got a chart that you can help break down the three altcoins that we're going to be talking about today: Ethereum, Litecoin, and Solana. So why don't you just start by giving us a lay of the land there?
Yeah, there's some just pretty basic high level differences that we can start off with. And that kind of provides some interesting context here. We got the first row, we can look at when they were launched, right? Bitcoin being the first in 2009, Litecoin following shortly after that. And I think that time frame was when the stigma or the misconception of everything being based on Bitcoin kind of arose, but now it's completely different. We have Ethereum in 2015, Solana launching most recently in 2020, and Bitcoin is by far the largest by market cap. That's also another reason we just like differentiate Bitcoin and everything else. It currently makes up, I think, around 60% of the total crypto market cap. And when we say market cap, that's just the price multiplied by the number of coins or the total supply in circulation. That's how we're getting that value. Ethereum is number two, still maybe 4 to 5 times smaller than Bitcoin, and then kind of everything else follows with Solana in the top 10, Litecoin in the top 20. So still some pretty notable assets that we're covering today with a pretty wide range, which is why this should be really interesting. I think one of the most interesting points, hopefully we get some questions on this, is it's like supply dynamics here. If you look at Bitcoin and Litecoin, they do have fixed supply schedules. So they have the maximum cap of 21 million for Bitcoin, 84 million for Litecoin, whereas Ethereum and Solana, they have no fixed supply. And that can often bring up a pretty interesting discussion. Hopefully we get some questions on that.
And we'll definitely dive deeper into their use cases in a minute. But another row on that chart, Matt, we're going to turn to you to talk about, which is the consensus mechanism specific to each of those coins or tokens. So start us off by just defining what on earth that is for folks who don't know. And then after that, it's up to you.
Yeah, it's a great question. It's definitely a core concept underpinning these blockchain networks. So it's definitely a good starting point there. But first, it's really worth noting that all of these cryptocurrencies are similar in that they run on what's called blockchain technology. And so blockchain or blockchain technology is really basically just like a digital ledger or database that everyone can see and agree on, where each entry or block, as they are appropriately called in blockchain, is locked in place and linked to the previous one so no one can cheat, no one can spend funds that aren't theirs, or change the historical record of transactions. And so, where a consensus mechanism comes into play here is that a consensus mechanism is really the set of rules that helps a blockchain network agree on which data and groups of transactions are correct without needing a single person or organization in charge. And so that's a really core theme there, is that there's no single entity, there's no intermediary, there's no middleman. So you need that consensus mechanism so you can have that agreement without having that third party, really running that database. And so the consensus mechanism is the system that the blockchain uses to choose which computers, or nodes as they are called in this context, get to update and verify those transactions. And there are two main types of consensus mechanisms that we're going to focus on today. The first being proof of work. And that's a consensus mechanism that requires actors called miners to solve computationally intensive cryptographic puzzles. And doing this work helps keep the network secure and make sure those cryptocurrency transactions are valid. And cryptographic here comes from the word cryptography, which is the science and practice of securing information by transforming it into a format that is unreadable to unauthorized parties. So it really keeps that data secure. And this ensures confidentiality, integrity, authentication, and permanence of the data that is contained in that digital database. Now, on the other hand, we have another consensus mechanism called proof of stake. And this is a consensus mechanism that requires actors or validators to bond or stake tokens to validate transactions and add new blocks to the blockchain. And so this works a bit like a lottery system with validators who are randomly selected to check and confirm transactions. Now, Bitcoin and Litecoin are similar in the fact that they use a proof of work consensus mechanism, whereas Ethereum and Solana both use proof of stake, although Solana's version of proof of stake varies slightly from a technical perspective.
All right, thank you for that quick look at how they work. But Max, back to you for what are they supposed to do? We get a version of that question all the time. There's so many different cryptocurrencies out there. Of the four we're talking about today, said glibly, what's the point? What are they there for?
Yeah, it's a good question. Honestly, I think probably the most important question, especially as like non-technical people, not developers, like this is what we can latch on to for like our mental models. What are they actually used for? So if we look at this at Bitcoin first, it's largely known as a store of value, also as a medium of exchange to some degree. And Litecoin, kind of in that same bucket, is almost the opposite. It's focused more on being a medium of exchange, although known as a store of value to a lesser degree, especially relative to Bitcoin. But in this bucket, kind of at the most basic level, both Bitcoin and Litecoin support the basic functionality of sending and receiving value, right? Without an intermediary. That's kind of the whole point, and it's very basic functionality. So we can keep those two kind of in their own bucket. And moving on to Ethereum and Solana, you could say these two are in a similar bucket as well. The core idea is that not only can they send and receive value without an intermediary like Bitcoin and Litecoin, but they allow, or they are tech platforms for decentralized applications. Or dApps, as you'll see there. That's a lot to mouthful, but when we say decentralized applications, we mean that they're decentralized because the applications run on a blockchain without the need for an intermediary. So not only can you send and receive value, you can do other things like trade assets or, make very specific payments, what have you. And then the application piece just means that it's code or what we call smart contracts that are facilitating the activity, thereby removing the intermediary. So those are kind of the two buckets that I would use in our mental models, and hopefully we can kind of get into the nitty gritty of both of those. But yeah, that's a pretty clean start, I would say. Jim, what do you think?
Love it. Thank you. We'll definitely dive deeper into all of the above. Just worth noting my 2 cents here. One thing that all cryptocurrencies have in common, certainly all investments have some level of risk. Cryptocurrencies are on the risky end of risk. There's a relatively high level of risk associated with investing in cryptocurrencies. There are always scams, new ones popping up all the time to be wary of in this space. And even the oldest of cryptocurrencies is still very much subject to wild price volatility. I see a lot of questions coming in the chat now about that exact question when it comes to Bitcoin's very recent price volatility. So we'll get to those in just a second. But in general, if you're looking to get up to speed on topics like that, fidelity.com/crypto is a great resource for you. And you'll hear us mention it a couple more times before this live stream is over. For now, let's focus a little more heavily on Bitcoin itself. We've got a couple of questions specifically about BTC. Chelsea, when she registered, asked us, what's Bitcoin? Can't get more straightforward than that. Norman has a slightly more nuanced question as well. Please explain the intrinsic value of Bitcoin in terms of mainstream utility today. In my words, Norman wants to know, what is this thing and what's it used for? And Matt, we'll turn it back to you.
Yeah, two really important and great starting questions. So thank you, Chelsea and Norman. But I think we should start here with a quick definition of Bitcoin. And there are actually two kind of niche definitions that we're gonna think about and talk about here. And so what we have is Bitcoin, which is sometimes written uppercase or with a capital B, and sometimes with a lowercase b. And the core difference between the two is that Bitcoin with an uppercase B is referring to the Bitcoin network or the Bitcoin blockchain itself, which is essentially just software code that acts as a protocol and creates a payment service. So the Bitcoin network, again with that uppercase B, uses a decentralized proof of work consensus mechanism that we just spoke about right before. And Bitcoin, the network, it's really unique because it is the first time in history that we can send value digitally without intermediaries. And this is a concept known as peer-to-peer transfers. And it is the first open and global payment network. And then on the other hand, we have Bitcoin with a lowercase b, which is referring to the token or the asset that is sent on the network. So Bitcoin with a lowercase b are really just digital tokens that are native to the network and can be treated as a scarce digital asset or aspiring form of money. And these tokens are what can be bought or sold on exchanges and what you will see price quotes for. Now, Bitcoin, the token or asset, is unique because it is the first non-sovereign, non-bank potential or aspiring money, and it is a digitally scarce asset with a hard supply cap and a predetermined issuance schedule. Now, when we put these together, Bitcoin, both the network and the asset, launched in 2009. It was created by an unknown person or group of people by the pseudonym Satoshi Nakamoto. It was the first cryptocurrency that can be transferred peer-to-peer using blockchain technology. And again, focusing kind of on the asset itself is the native cryptocurrency, that lowercase b. That is the reward given to miners for keeping this network secure, and it has that fixed supply of 21 million. So very important there, very, very scarce digital asset. Only 21 million will ever exist of Bitcoin. And so when we put both the network and the asset together, we get the first provably scarce digital asset that can be sent to anyone, anywhere in the world at any given time without reliance on a third party or intermediary. And that is the true breakthrough innovation of Bitcoin.
So Bitcoin, if we listen to what Max was saying a minute ago, was created, invented, introduced as a way to be a medium of exchange, buy and sell things using Bitcoin as a supplementary or replacement currency. But as you mentioned, Matt, it's also often used as a store of value these days. There's a lot of people buying and holding Bitcoin. Help us wrap our heads around Bitcoin as a store of value when it's literally intangible.
Yeah, it's a really great question. And store of value is really a core concept underpinning, Bitcoin as an asset, as you were just mentioning. And I think it's important to start with what a store of value really is. So a store of value really means that people trust this asset will hold purchasing power in the future, meaning it's not going to degrade, it's not going to deteriorate, or it's not going to debase, and it aspires to be a superior vehicle for wealth preservation. And when we say debase here, what we really mean is the reduction in the value or quality of a currency or its purchasing power over time. And so the most common physical example of a store of value would be gold. Now, Bitcoin, on the other hand, is an aspiring store of value because unlike certain other assets, it does not degrade over time. It has that sort of digital durability factor. It is fungible, so any Bitcoin can be traded for another, just like Jim, I could give you a $10 bill is good for any other $10 bill. It is verifiable, meaning it cannot be counterfeited. And above all else, it is provably scarce with only 21 million that will ever exist. Again, that's a very, very core component of Bitcoin, that digital scarcity. And so Bitcoin aims to be a store of value against other types of fiat currency debasement. Again, with only 21 million that will ever exist, it has a very hard supply cap, meaning it is very finite in its nature by design, compared to theoretically infinite amounts of fiat money or dollars that can be printed. And so that sort of monetary policy hedge is where its store of value or wealth preservation aspirations come from.
And now what we're going to do with Bitcoin and then all of the other coins we'll analyze is just be honest with the audience. Let's talk about some potential pros and potential cons. What are some good things? What are some potential bad things about each coin? And we'll start with Bitcoin.
Yeah, let's start with the good stuff here. So we'll start with some potential pros. And, there's a bunch of other potential pros other than what we have listed here, such as its decentralization, transparency, its borderless nature, the promotion of financial sovereignty, and desirable properties of money. But here we're going to focus on and highlight some of the most cited potential pros of Bitcoin. And we'll start with security at the top. It's a very important concept and important aspect of Bitcoin. And that proof of work system that we were talking about earlier is very, advantageous to the security of the Bitcoin network. So that proof of work system and the global mining network make it extremely hard for any single entity to control or hack. So that is by design, and that is to make Bitcoin very secure and uphold that integrity of the underlying network. We also have a very strong brand and institutional adoption behind Bitcoin. Bitcoin is the first and largest cryptocurrency. It has that first mover advantage. It is widely recognized, and it is increasingly being held by corporations, institutions, some universities, and even governments are holding it as a reserve asset. And then lastly here, again, we're gonna go back to the fixed supply component. So Bitcoin has that pre-programmed monetary policy. It has that hard supply cap of 21 million Bitcoin, which supporters believe make it a very strong hedge against inflation, or at least, more so than other cryptos might.
Bitcoin, of course, also has its critics. What do they say?
Yeah, I mean, similar to the pros, there are other potential cons that we might not, mention here, such as the technical complexity, especially for beginners, the price volatility that you mentioned earlier, Jim, transaction irreversibility, a bit of a feature and a bug, and the relatively limited adoption as a medium of exchange for everyday purchases. But again, for the purposes here, we're going to focus on some of the most commonly cited potential cons, which are it is slow and impractical for everyday use. So that proof of work system that, really secures it also makes transactions slow, which is about 10 minutes per block. So every 10 minutes on average, a batch of transactions get pooled together and added to the blockchain. And those are added about every 10 minutes on average. So it's not really ideal for daily purchases compared to faster networks due to that longer relative settlement time. It's also very energy intensive, so that proof of work network, consumes large amounts of electricity. And, while this is by design to ensure there is an upfront cost of production for miners to incentivize them to act honestly and acting in the best interests of securing the network and not cheating the system, it still raises environmental concerns despite the growing use of renewable energy. Another potential con here is that, Bitcoin is very simple and ossified in its design. So that simple design and its simple code is not as developer friendly and more impractical for building decentralized applications. Max kind of spoke about that being kind of a core value proposition or use case for Solana and Ethereum. Bitcoin comparatively is really not as developer friendly as those networks. And kind of going off of that is the scalability trade-off. So Bitcoin prioritizes security and decentralization over speed and scalability, which does make it more difficult to scale over time, particularly as adoption grows. And so there is this core concept in the blockchain community called the blockchain trilemma, where a blockchain can prioritize functionality for speed and scalability, security, and decentralization. And while it can attain two of these features, obtaining all three can be incredibly challenging. And so Bitcoin was built to optimize security and decentralization at the expense of speed and scalability.
Got it. That wraps up our Bitcoin section. But before we move on, we do want to do a bit of a knowledge check. We like to have our live audience engage in a bit of a choose your own adventure experience here. Vote for A if you want the Max and Matt to talk a little bit more about Bitcoin's proof of work consensus mechanism. Vote for B if you want to talk more about Bitcoin's fixed supply, that 21 million supply cap. C is what Bitcoin is used for. And D is, I've had about enough of Bitcoin. Let's move on to talk about Ethereum. And by the way, there will be a winner, right? And regardless if your vote doesn't get talked about, just remember that fidelity.com/crypto is an amazing curated resource that we build all the time. We update all the time that's got answers to those topics and a whole lot more. Kelly, I'll look to you now to see if there is a clear winner on this particular poll.
Yeah, thanks, Jim. There is a clear winner. So it looks like the majority at about 60% is ready to move on to Ethereum.
Love it. Max and Matt did such a good job. It's time to talk about Ethereum. And we've got a trio of viewer questions that came in during registration that will guide the start of our ETH conversation. Daniel says, wants to know about Ethereum's future use cases. What's it going to be used for? Roger asks, why would the price of Ethereum rise if there's no limit on its production? And Gurpreet notes that, when he wrote the question at least, ETH has been outperforming Bitcoin as of late. What's behind the rise of ETH? So the real simple answer to any price question is it has to do with supply and demand, but there's a lot more behind what moves a crypto's price. So let's talk a little bit more about ETH specifically before we start talking about prices. And Max, I'll turn it back over to you for ETH.
Sure. Thank you, Jim. I guess just for some context, we can cover like the basic need to know, and then we can get into the nitty-gritty. A lot of good questions there. To get us started, ETH or Ethereum, the network was launched in 2015 as a project headed by Vitalik Buterin and others, and is now the second largest cryptocurrency by market cap. As I mentioned before, the blockchain is programmable so that the part or most of the value proposition is that it allows for developers to create applications that users then pay to use, right? So like and similar to what Matt mentioned, there's a difference between the asset and the network that's core for understanding how these networks work, and like what you're investing in is very important to understand that difference. Interestingly, as you'll see here, Ethereum actually started off as as using the proof of work consensus protocol, but then later changed to proof of stake in 2022 as they felt it fit their like use case a bit better. So to address Daniel's question directly, it can be difficult to say what the future use cases will be, but as of now, like what we've seen is like the most popular applications over the past year that users are paying for have been payments and trading related mostly. So since 2015, users as a whole have spent like over $20 billion in transaction fees for Ethereum's products and services, most of which again are payments related or trading financial assets. So, you could make some argument for Ethereum having a level of product market fit given like how much users have actually paid to use Ethereum and the applications that are on the network.
Let's do that pro and con thing again, if we could, Max, talking about, what people like about Ethereum and what they're maybe more critical of.
Sure. I can definitely get us started with the pros here. I would say the first one is developer focus, right? It is pretty easy to build on given the fact that Ethereum has been around for so long. There's a bunch of developer tooling, which might not mean much to you if you're not like technically focused or aligned, but it is generally, from what I hear, very easy to make applications or create like businesses that have products and services for users of Ethereum. So that is, I would say, where like relatively that Ethereum would shine. Something that was very popular when it came about in 2019 was the creation of a clear value accrual mechanism. This one I think is really interesting. I hope we get some questions on this later. But what I mean by like a clear value accrual mechanism is that there's this clear connection between the token or the Ether token and usage of the network. So each time you and I make a transaction, we pay a fee in ETH that gets burned. In other words, burn means that that fee actually gets removed from circulation. So this mechanism, in theory, means that like the more fees users pay to use the network, the scarcer the asset becomes. So that's that clear connection between the network and the asset. And then lastly, I think this one's interesting. Like a lot of Bitcoiners probably wouldn't list this as a pro, to be very honest, but I think like Vitalik and the Ethereum Foundation and all the stakeholders within the Ethereum community have made like a bunch of really good decisions over the past 10 years. And that's like why the community trusts them, with a lot of the research and analysis that goes into like framing the roadmap. So like in Bitcoin world, this might be a con, but in Ethereum world, this is like part of the value prop that Ethereum and a bunch of developers will like steer the ship in a way that's beneficial for the network and users.
And what don't people like? What are the criticisms of ETH?
Yeah, Jim, I mean, everything comes with trade-offs, so you could like flip any of the pros and turn them into a con
Right.
essentially, which I love. Always a good conversation. I would say the number one thing that, I would say would be necessary on a list of cons is the fact that there's competition always arising, right? There's always new blockchain networks or applications being made that have some overlap with the products and services that are on Ethereum. So like this should always be on your list of like risks or cons, and it's typically in all of our papers that we cite to our institutional investors is that, hey, new things are being built and there's a chance that like Ethereum loses market share to some of these newer networks. So that's definitely at the top of the list. Commonly over history, I've seen the inflationary concerns be like top of mind. Maybe we'll get some interesting questions on that. Critics often say that Ether doesn't make sense like as a store of value when they're comparing it to Bitcoin because you don't know exactly what the future, what the supply will be far into the future like you do with Bitcoin, right? So it doesn't have that fixed schedule. So that might take away from its store of value properties. And then lastly, as you see here, it's pretty related to the competition piece. It's just like newer networks are always coming up and they're always faster, they're always cheaper. So, it's not the fastest. And, that could and has actually contributed to some users preferring these other networks for that different types of transactions that they need to be faster, need to be cheaper. So on average, I would say ETH averages like 1 to 2 million transactions a day, which isn't going to be enough to facilitate every transaction in the world that we all do every day, right? So there is a bit of a give and take there.
All right, so that was a few minutes on ETH, but again, we're going to turn to the audience and see if there's anything they'd like some clarity on before we move on to our next topic. So head on over to the polls tab just to the right of the video player and let us know if you want to learn more about Ethereum's use cases. That's option A. Proof of stake explained in a bit more detail would be option B. Option C is learning more about how ETH tokens get burned. We only touched on that. We can talk a bit more about it. Or D, let us know if you want to head on over to Litecoin. I'm watching the votes come in. I'll vamp for just a second as people continue to vote and turn it over to Kelly. And looks like there's a clear winner again.
Yeah, clear winner again. I think we are ready to move on to the next section once again to Litecoin.
We will go on to Litecoin. Got a couple of registration questions there too. Sean, during registration, asked Bitcoin, Litecoin, etc. What's the difference? And Hillary asked, what about Litecoin? Is Litecoin worth it? It's a tough question because I don't know what you mean by worth it, Hillary, but I think we can give it a pretty good answer. Matt, talk about Litecoin, please.
Yeah, those are great, great two questions to start with. It's definitely a fun one there on the second. Is it worth it? We'll see, right? But Litecoin, the name actually, fun fact, derived from Bitcoin Lite. Litecoin was launched by the founder Charlie Lee in 2011. It was one of the first cryptocurrencies to be released to the public as an alternative to Bitcoin. So again, not as early as Bitcoin, but really there in a relative context in terms of one of those earliest alternatives there. But since Bitcoin was entirely open source, that code was open source, you could copy it, spin up your own blockchain, as Litecoin did. It was developed from that Bitcoin source code. Litecoin was really designed to be an inexpensive and quicker network for cryptocurrency payments. And so the Litecoin network can currently process and confirm transactions approximately 4 times faster than Bitcoin. So really they were focusing on, some of those, potential trade-offs that we looked at, some of those potential cons before. The speed and scalability component is what Litecoin was really, focused on improving with their network. However, on the other side, Litecoin does have a maximum circulating supply of 84 million tokens, so it has less scarcity than Bitcoin's 21 million. And the network does have a lower overall hash rate to safeguard its blockchain. Hash rate is really a measure of security. It's the total computational energy dedicated to securing the network. So oftentimes we talk about hash rate being the overall proxy for security of the network. And with Litecoins being lower than Bitcoin, it is not as secure comparatively. But Litecoin does aim to be the complementary medium of exchange asset to Bitcoin's store of value properties, which is really why Litecoin has prioritized that speed and privacy and kind of scalability component over Bitcoin. And so we'll focus on that privacy portion real quick. That privacy feature is actually optional, but it hides the amounts and addresses of individual transactions. And so the Litecoin balance using these privacy features has increased by almost 50%, according to a Litecoin blockchain explorer, over the month of October. And so that's an interesting trend that we've recently seen, and a trend we're continuing to monitor closely.
And pros and cons.
Yeah, I mean, like Bitcoin and Ethereum, there are other potential pros of Litecoin outside of what we'll focus on here. They have those lower fees, they have that established history, they do have some deeper liquidity relative to other cryptocurrencies. But some of the potential pros we're really going to highlight here are the faster transactions. So that the Litecoin processes payments in about 2.5 minutes, making it quicker than Bitcoin's 10-minute average. So, pretty significant improvement in a relative context there. Bitcoin has that 10-minute block time. Litecoin has 2.5-minute block time. It also has enhanced or better privacy. So those additional privacy features do hide transaction details from the public. So really only the sender and receiver know the amounts. So if you're looking for maybe a little bit more of a private blockchain network, perhaps Litecoin, is advantageous for that. And then thirdly, Litecoin is very similar to Bitcoin. So Litecoin does use that same proof of work consensus mechanism and a halving mechanism where new supply gets cut in half every 4 years. So it does give a familiar structure for other crypto users.
That's super helpful context there. But I bet you can also predict my next question. What are some cons, potential cons?
Oh, I didn't see that coming. We have to be intellectually honest here and look at the potential cons. So, one of them is sort of what I mentioned before. It is less secure and more centralized. So that Litecoin speed does come from those easier cryptographic mining puzzles, which critics could say make it more vulnerable to attacks and lead to more centralization of mining power. Another potential con is the lower adoption and limited differentiation. So it is far less popular than Bitcoin from an adoption standpoint, and often does lose that battle to Bitcoin as a means of long-term wealth storage. So again, kind of going back to that kind of fun fact earlier, it is that Bitcoin Lite. It is seen as that lighter version of Bitcoin, but it doesn't necessarily have a unique value proposition by itself. It is a little bit faster, a little bit more scalable, but it is very similar to Bitcoin otherwise. And so that lower network effect compared to Bitcoin has resulted in a smaller developer and user community compared to some of the other assets that we talked about today. Bitcoin, Ethereum, Solana, lower overall developer activity happening on the Litecoin network. And then kind of going off of that, thirdly here is just tough competition. There are other cryptocurrency networks that are even faster than Litecoin. And, we're seeing increasing competition, what feels like every day, a new network could be spinning up. And so Litecoin, despite being one of the first in 2011, it really isn't the quickest option out there anymore. And we're seeing, increasing competition from new market entrants.
All right, back to the audience now to see what we're going to talk about next, Kelly. There's a winner again.
Yep, same tune again. So the majority, 80%, are good to move on to Solana.
All right, let's do what the people want to do. We're moving on to our last of the 4 cryptos that we're going to talk about today, Solana. Let's start with some questions that are very easily answered. We've been getting a lot of these for quite a while. Heidi wanted to know, when will Fidelity add other cryptos like Solana? Joshua says, when will we have the ability to purchase coins such as Solana? Taylor wanted to know, when will Fidelity users finally be able to buy Solana? Well, the answer, I hope, is very clear already. As of last month, as of October of 2025, yeah, you can buy Solana. You can trade Solana here through Fidelity Crypto. And you can learn more about how to get started and how to find more educational resources about Solana, in addition to what we're about to talk about, by heading over to fidelity.com/crypto. Again, we're quite proud of it, our highly curated, really robust educational space to help you get up to speed on all things related to both Fidelity Crypto, the account, as well as cryptocurrency education in general. Let's grab a question from Daniela. When she registered, she said, so is Solana a new cryptocurrency? I don't quite get how it works. Max, tell Daniela and everybody about Solana, please.
Yeah, absolutely. To directly answer Daniela's great question, it is relatively new, right? It's been around for just 5 years, and I'll be honest now, I don't think, not many people I've spoken to quite get how exactly it works either. So you're definitely not alone. If I were to simplify it, just, being respectful of people's time here, is, the entire technology stack of Solana is really focused or just optimized for speed, right? It's in that similar like mental model bucket of Ethereum, where the whole goal is to host applications that users use. Solana, again, they've tailored their whole network to just be as fast as possible because they have really a core goal of just like being the venue for trading all assets. That's the stated goal of the teams that support Solana. And it seems that that's what the users are coming to Solana to do. For example, Solana had an on-chain trading volume of $150 billion in October, whereas Ethereum had just about $100 billion. So that's kind of the best way to think about it, Solana as a trading venue. Importantly, if you don't get how it works now, things change regularly. So like that's a really important piece for any investor or folks on their learning journey. If you try to understand Solana and how it works today, it's going to look a lot different in just a year or two as they're consistently changing and upgrading the network.
Some pros and cons then, if you wouldn't mind.
Yeah, of course. Similar to the kind of the idea I was sharing, speed is the pro. It is a trade-off, of course, right? But a lot of folks see that as a clear benefit. Solana averaged about 68 million transactions per day over the past 6 months for little to no cost, right? A lot of these transactions cost around a penny. So that makes it much quicker and cheaper than Bitcoin, Ethereum, or Litecoin, right? Another pro, again, still a trade-off, but many people view the clear focus on trading as a pro because all of the developers are like just have this narrow focus and they're like everything they do is aligned around that one goal. And then lastly, they have a very fast-growing ecosystem when it comes to developer activity, stablecoin supply, active users, just the value being transacted, as I quoted earlier, very fast-growing ecosystem, hard to find a trade-off there. And then on the con side, I guess the trade-off to like the narrow roadmap would be that it's more centralized, both in its governance, like there's a smaller team determining like what is done to the network next, as well as the speed. It requires really kind of beefy computers to run the transactions at such a high rate. So that's, I'd say, the most cited con here. Similar to that is that it comes with outages. It's actually had several outages in the past, so some people do worry about its reliability. They typically have just lasted a couple hours, but it has kind of associated Solana with a bit of a stigma there around like unreliability. But the last outage was over 2 years ago, so it seems like they've taken that to heart and worked on that. And then lastly, again, Jim, as I mentioned, competition wouldn't be a con without it. It's a very innovative space. A lot of people are going after that trading venue type of investment thesis. So you would have to have it on here in terms of the list of risks.
Max, Matt, Kelly, thank you for your time today. And one final thank you to everybody joining us live for this live stream. Really appreciate your time. Just a final reminder to register for our next live stream. You can see the link on your screen right here. Thank you so much for taking time to be with us today. I'm Jim Armstrong. On behalf of everybody behind the scenes here, thank you again, and we hope to see you soon.